Okay, this is today's video review for Thursday, July the 23rd, 2015 for Drum Energy Bands. Please read our trading disclaimer. We're just starting off looking here at the daily chart for the NASDAQ futures. You can see that we did have some levels of support. We actually did have a level of weekly support. This is one of our valleys off the weekly. And you'll notice that the bottom energy band that's magenta, that's the weekly envelope bottom, how it held right to the tick. And you'll notice where we're currently at, this purple level up into here, this is the monthly upper energy band that's causing some resistance to the market. We pulled back so far to the tick to the top of the weekly energy band. So, as all these commodity prices are commodity prices are collapsing, and so many of the experts are saying that this is what precipitated the last crash, and we'll have to wait and see, of course. But for drum energy band traders, the monthly upper energy band is definitely on the radar screen for looking at a potential to get short. How far short depends on reading the other chart frames. So let's take a look at today and what we're going to discuss for today. So I want to go through this morning example in a little more detail than normal. Try to put a lot of detail into every day, and I try to expose people to the different trade plans that are available. Some people are really into scalping and want like 30 to 50 trades in a day or half a day or whatever. And then there's other people that want 3 to 5 trades that take time to develop in a certain way. And what we're going to do today is we're going to look at some of the rule limits for trading weak energy and this concept of what a block is. It's a very simple concept, but essentially it breaks down into what we'll just call a trade plan. And we have these point one here is CTC. If you've never joined us, thank you for joining us. It's the challenge to the crest or the challenge to the valley. Crests are resistance and valleys are support, and we'll show you that. And the midline is a potential point at which there is new energy that can push markets. And then down at the bottom here, we're just being redundant, and we'll just take that out here. That's just silly. So anyway, let's get going. So we're looking at the focus frame chart for the NQ. We'll use a 600 tick chart, and we're looking at the market, and we're saying to ourselves, as price is coming down, we can see this yellow line, or excuse me, yellow area is pointing down, and price for the most part on its way down is staying below this center white line that we call our midline. So it's pretty orderly. It's a strong trend down. This lower yellow area is down up until a certain point, and at this point here we come into a potential area of support. Now we teach this in the course, and we call this a power mid when this dotted white line is inside this magenta band. But I don't want to get really too technical, other than to say the market had been going down. Now for whatever reason it's found support and it's bounced back, or it's retraced up. So if we're looking for a lean to get short, Fibonacci would say, take the high up here, take the low, draw some retracement, maybe take 3 or 4 other retracements and try to find some confluence. Well, what we're saying is that when price retraces back to this solid white line, there's a potential for the market to have strong resistance there. And of course also when it retraces back up into this upper yellow area, it can have strong resistance. And when the market does get above this solid white line, we're calling this a block. In other words, the trend down is being blocked to go any higher. Its job of the block is to continue to push the trend lower. So you can see it does push it lower, and then it retraces back, and at this point we go higher than over here. So this up into this area is like a block, but it's expanded slightly higher. So what we do with these energy bands is we look for potential areas where the market would reverse. So we would be looking, because we're in a downtrend, we'd be looking in this area here for a potential short. We'd be looking in this area down here, for a continuation of a trend, and then a pullback up into this upper yellow, the same kind of thing. You'll see that we pull back up into this yellow here, and when it pushed down, we couldn't get below this valley here. This is what we call a valley here, and you'll notice this line is pointing to a crest. This is our white dotted E-mid line. It hooks up for a valley and hooks down for a crest. So what happens when the block pushes down and it can't break the valley? Then what it's saying is the block isn't a very strong block. It's having a hard time to continue the trend, and we have signs down here at the valley that tell us that to get long. So I want to just go through that briefly first before we actually look at some examples. So one other example is you'll notice that it pushes down here, excuse me, and price does make a higher high. But when it pulls back to the block, which is now, we're starting to give way to congestion, exit out of this action of congestion to the upside, this block down here should provide strong support. It actually does, and you'll see it retrace back to another support block and pushes up. At this time, we'll see on our trade chart that there's a crest developing up in here, and this block is not doing a good job to continue the trend. So, trend reversal or potentially congestion action, like, happened here for a little bit. So let's have a look at some of those specific examples. So when we keep things really simple, that's when us traders actually do make some profits. So let's take a look at this bottom right here, about 946. Let's look at a chart just a little bit higher. You notice that as we come down right into here, as we come right down into this area here, this happens to be a higher energy band of another chart that's a little bit higher. This is a 3,000. We're looking at a 15,000. This area down here becomes strong support. It doesn't matter what area we're looking at, whether it's this upper yellow or this area down here. We have to see evidence that it's holding. And the way we see evidence is when we turn our attention to whatever chart we're going to focus on. In this case, we're looking at a 600 tick. This valley here, as it retraces back, needs to hold, and that level of support is for that area from that higher chart that we're looking at. So what we want to be doing as traders is we want to be looking for our crests and valleys. You'll notice this valley here broke. Price couldn't push up through this white dotted line. It broke down. And as it retraced, this support should be resistance. Well, it showed us that buyers kept pushing it higher. And then the block pushed down, couldn't break the valley. So what does that tell us about the support? Support is very strong, and this white dotted line here is not pushing down. So we're expecting the market to move much higher. Our trade chart gives us individual entries. We're going to leave this here as a part 1 for today, and then we're going to pick up where we left off in a part 2. Thank you for listening.